Shares of Snowflake are down sharply. You see almost 19%. This after the company's outlook, its guidance for the next fiscal year was well below what many analysts at least expect. Also, the announcement that Frank Slootman, its CEO, is retiring, that also pressuring the shares. Salesforce beat estimates, but perhaps as well the guidance for 2025, giving some investors pause. You can see stock's not doing much of anything right now. Brent Thill is the Jefferies tech analyst, covers both, has buy ratings on both. And, well, let's just start with Snowflake. Brent, what was your take? How unexpected was this? Clearly, I guess, to answer my own question, fairly unexpected that they would come in with that lower growth rate for next year.
Yeah, good morning, David. It was definitely lower. The street was looking for 30% growth. They guided to low 20s. Part of this, you could believe that they put a new CEO in, and you would not want to set a high bar for a brand new CEO coming in. So that was obviously disappointing. But behind the scenes, they had really strong backlog acceleration, and they signed their largest deal ever at $250 million on a 5-year deal. So they're showing great strength and underlying momentum. I think part of this downfall is related to Slootman resigning. Effectively, Frank and Mike Scarpelli were the two co-pilots everyone bet on for many years, right? They sold their first company. They went to ServiceNow pre-IPO, took it public, established the company, grew that to $100 billion plus market cap with Bill McDermott's leadership. And so this is a big blow for shareholders that really believed in these two co-pilots that had flown for a while for many, many years and given amazing returns to shareholders. Yeah. So I think part of this is the Slootman effect. Part of this is just a conservative guide in front of a new CEO. And if I was the CFO of Snowflake, I wouldn't set a high bar for the new CEO coming in.
Right.
So we don't think this is competitive.
It makes it much easier for him to exceed expectations, I guess, is your point, the new CEO. I do wonder as well, does it take into account any of the new products conceivably the company will be introducing over the next year?
No, it does not. None of the new AI products are in the mix. So effectively, I think this is the bigger issue for a lot of these software names. If you look at the semi names, NVIDIA and AMD are up again. I've been traveling through Europe, meeting with investors, and no one wants to get off the semi trade. Effectively, many of these AI products, it's hype, and it's not revenue reality today. For every software company, it's low single-digit % of revenue. So investors have gotten a little bit over their ski tips as it relates to the excitement of AI. It's going to come, and we've been saying this, you have to be patient. But it's not here yet, and the revenue is not going to be material until the end of 24 into 25. So I think right now you have a semi cycle that's working. All of our companies in software and internet are buying semis. They're getting ready for the AI wave. Expectations that this spills and creates immediate revenue are false. That's not happening. And so right now we believe, again, you want to be positioned in a lot of these names on weakness. Every single software company I cover has set numbers below that of the street. And I think it's a common pattern. So this isn't, new for Snowflake. Everyone is doing this. Even Salesforce lowered guidance below the street for the year. And again, This is because you don't have a big product cycle on AI yet that's material to revenue. It's hype today.
Well, yeah, you mentioned Salesforce. Let's just end on that. Again, the stock's sort of flat on the day. The margin improvement continues, though, and that seems to have been what's caught the sort of imagination of investors over the last year.
Absolutely. Margins have been first for Mark Benioff. They've done a nice job driving from 20 to low 30s. They still have a long way to go. We've said this, that cruise altitude from 30 going up to high 30s is very easy. If you look at all their peers, Adobe mid 40s, Oracle low 40s, everyone is above Salesforce in their peer group. So there's tremendous operating margin leverage left. And we believe they'll catch the AI wave later in the year, early 25. Again, it's super early there, but we do believe that they're in a really good position as it relates to their solution in the front office. McKinsey commissioned a study and said that 3/4 of the AI use cases are in the front office. This should help Salesforce throughout the year.